Welcome back, accounting students. Before the ad break, we were obviously looking at KT traders. We are doing a bit of analysis and interpretation, and thus far the questions have been revolving around stock. Let's now move on to the next part of the question. Right, so the next question, Tylo, a partner, let's quickly grab a pen before we carry on. So Tylo, one of the partners, is concerned that the business may experience liquidity problems in the near future. You agree with him. So the question is not giving you an option to agree or disagree. They're telling you you agree with Tylo. Discuss by referring to relevant ratios. So let's go to the information. Right, and one more time, let's re-look at the liquidity ratios given. So remember, we've already looked at the current ratio and the asset test ratio, and in our previous question, we established that the business is keeping too much of stock on hand. Can that relate to liquidity problems in the near future? Yes, it can, because remember, in the event of the stock not selling, you are now sitting with the stock, right? Sitting with a whole lot of electronic gadgets, and you want to convert that stock into cash. But if it's not selling, you sit with that stock. So that could create cash flow problems in the future. So I can obviously use the current ratio and the asset test ratio as part of my answer. So going back to the question, let's just go back a slide, right? So looking at the current ratio and your asset test ratio. So current ratio and the asset test ratio, okay? The business is keeping too much, the business is keeping too much of stock, on hand. Right, and you can further explain that having too much of stock on hand can relate or can result in cash flow problems in the future if that stock is not sold. Quite a bit for me to write, but I know you guys are following, you are paying attention. Right, let's go back to the next set of ratios that's given to us. So if we look at the information, the table one more time, we are also given the debtors collection period, and we are given the creditors payment period. Now, if we examine the debtors collection period 2020 compared to 2021, we notice, right, last year our debtors were taking 33 days to pay. This year, they are now taking 45 days to pay. So obviously, our debtors are taking longer to pay the business. Now, how does this impact on liquidity? The longer your debtors take to pay their debt, the longer it takes for cash to go into your bank account, and that could result in cash flow problems. Remember, normally we want our debtors to pay us within 30 days. 45 days is stretching it a bit, not stressing. Guys, don't stress. Okay, it's stretching it a bit for the business, so just remember that. Right, if we look at the creditors payment period, previously we were taking 46 days to pay our creditors. We are now obviously paying them much sooner. We are now taking 35 days to pay our creditors. Now, how could that result in liquidity problems? Remember, you normally want your debtors to pay you first, right? We want our debtors to pay us first. That money goes into our bank account, and we then use that money to pay our creditors. Now, in the event of the opposite happening, because that's what's happening here, we are first paying our creditors, but there's no money going into our bank account, which means where is the money coming from? Probably a bank overdraft. We're using a bank overdraft, we're paying our creditors, and then only are our debtors paying us. Now, how does that affect the business? Obviously, having a bank overdraft means you've got to also pay interest to the bank, okay? And that can be avoided if your debtors pay you first. So clearly, we can see why Tylo is concerned. There's reasons to be concerned. So the second part of your answer, right, look at the debt, or sorry, the debtors, not debt, the debtors collection period. Okay, exactly what I explained earlier on. So the debtors collection, compare this to your creditors payment period and talk about how this is going to impact on cash flow. Okay, debtors are taking too long to pay. They should be paying us within 30 days. And our creditors, on the other hand, we are paying our creditors too soon. We should rather negotiate with our creditors a payment period between 60 to 90 days. Let our debtors pay us first, and then we pay our creditors. Okay, right, hopefully that helped. Let's now move on to our next question. Okay, so the next question, right, we've got a bit of additional information that's given to us. It's the same question, guys. So we're given the capital account for both partners. So we've got Tino as one partner, Kylo as our second partner. And then we are also given a bit more information on this particular partnership. Right, so once again, study the information that is given, answer the questions, right? We already know what they sell, and we are given an extract of the current account for 2021. Okay, right, so let's look at the question, and then we'll come back to this information. The question wants us to calculate the percentage earnings of Kylo and Tino for 2021. So what are their percentage earnings? In other words, we've got to do a ratio, a financial indicator calculation. So let's start off with Kylo first, right? And remember, in order for me to calculate his percentage returns, I'm just going to cross out the word earnings and replace that with returns, right? So what is his percentage returns? I'm going to take Kylo's total earnings, and I'm going to divide this by his average, right, capital, okay, plus current accounts, right? So remember, guys, at this stage, you should know your formulas, right? All I'm going to do now is do the calculation. But when it comes to the actual formula that is being used, if you don't know your formulas, make sure you're looking at a formula sheet or you're looking at your textbook. Obviously, in order for me to get a percentage, I'm going to multiply this by 100. Right, so let's start off with Kylo's total earnings. So let's go back to our table, right? And remember, we're busy looking at Kylo. Okay, so Kylo's salary, 350,000. His interest on capital, 70,000. Share of remaining profit, 26,000. So remember, total earnings is obviously a sum of salary plus interest on capital plus your share of remaining profits. So I'm simply adding up these three amounts to get his total earnings. So let's pull out the calculator, right? And let's calculate Kylo's total earnings for 2021. So 350,000 plus 70,000 plus 26,000, and that gives me a total earnings of 446,000. So I'm just going to take that through in my answer sheet, right? So 400 and, just want to check, see that one more time, 446,000. Right, now comes his average capital and current account. Remember, when we say average, we're looking at 2021 plus 2022 capital and current account divided by 2. That gives us average. So if you want to show your calculation, which you should, we're looking at half of his capital. Let's go back to the information, right? So on the previous page, so Kylo's capital at the beginning of the year, 1,400,000. And because he decreased his capital by 100,000, his balance at the end of the year is 1,300,000. So remember, I need his balance at the beginning of the year and at the end of the year for this calculation. So let's go back to our answer sheet. So we've got 1,400,000 plus 1,300,000. Okay, right, then I need his current account balance. So looking at the information given, current account at the beginning of the year, it's a positive 4,500, but his current account at the end of the year, can you see it's in brackets? So obviously, guys, it's a negative 2,000. So let's fill that in. So we've got positive 4,000. Or was it 4,500? Let's quickly check. It was 4,500. So plus 4,500, but we're going to minus the negative balance of 2,000. Okay, so minus 2,000. Okay, right. So let's now continue with the calculation. So quite a bit of calculation here for us to do, but we should be able to complete this together. So I just want to clear my screen. 1,400,000. Okay, we adding 1,300,000. Okay, then we also adding 4,500. Just fix that. Minus 2,000, and because we need an average, remember we have to divide this by 2. Okay, so that gives us his average equity, Tylo's average equity, 1,351,250. So let's just write that down because I'm going to forget. 1,351,250. So 51, just go back. 51,250. Okay, just grab that one more time. 1,351,250, correct. Okay, right, so now what's left for me to do is just to work out the percentage, which should be not too difficult to do. I'm going to write on this side of the screen, guys. Hopefully you are following. So let's just clear that. So we've got 446,000, right? We're now dividing this by 1,351,250. Okay, and remember we're multiplying it by 100 because we want a percentage, and that gives us 33%. Okay, so 33,01 if you're rounding off to the second decimal, or you can just keep it as 33%. So that is his return on capital. Okay, right, now I haven't finished the question, but what I want to do is let's take a quick break, and when you guys return, we'll continue with the calculation of the percentage return for Tino. Okay, so you guys go for a quick stretch, and then when you return, we'll continue.